In this video, I'm going to walk you through my ultimate guide to option selling. After personally trading for over 8 years and trading through so many different types of markets, I realized I needed a system that actually worked for me. This is the system that I built, the mental frameworks that work through. I'm going to walk you through exactly how to use it so that no matter what market you're in, no matter what account size you have, you know exactly what to trade and when to trade it at any given time. Now, before we dive into this, which shows you the exact strategy to use at the right time, I'm going to walk you through some options basics, okay? So if we're looking at options basics, you need to understand some fundamentals, okay? When we sell puts, we're betting that the market will go higher. So if you don't know what options are, there's two different types of options. There's calls and there's puts. When we sell these things, we get to create higher leverage, higher win rate trades. Now, how do we do this? A put, if we sell a put, we're betting that the market will stay above a certain level. So we can go all the way down here and say, hey, I bet that the stock will stay above this level. Guess what? The market's already above this level. So if it keeps trending higher or goes sideways or goes down but stays above my level, I make money on this trade. So instead of trading stocks where I only make money when it goes in the direction that I picked, now I can make money virtually no matter where it goes. And so that is the beauty of selling a put. Now, a call is the opposite. It makes money when you sell a call when it stays below a certain level. So that means that if we are bearish, if we want the market to go down, or we think in general it's going to go down, we're going to be selling calls. If we think in general the market's going to be going higher, we're going to be selling puts. So now that you know what you're doing in different market scenarios, now let's break down how this works. I do want to quickly cover, though, there is something that holds back most traders, and it is one of 3 things. And if you can find out which one of these things are and fix it, you're going to stop struggling as a trader. So number 1, it's the right strategy, okay? You must have the right strategy. Now, you might be wondering, how do I know if I have the right strategy or not? Okay, here's a couple questions. Is your strategy mechanical? Meaning, does it have a set of step-by-step rules that you can follow so that every time you do the exact same thing? If yes, you might have the right strategy, but there's still 2 more criteria. It also needs to have been back-tested over at least the last 10 years, and it must have been traded with real money so that you know that it can still hold up in live market conditions. So if all those 3 things are met, and you have that, congrats, you have the right strategy. If you don't, then you need the right strategy. Don't worry, later in this video, I'll be showing you what the right strategy is for me at any given point in time. So you'll see that here in a second. But I just wanted to help you understand where your bottleneck is, where your issue is in trading, okay? Because a lot of people don't know what's holding them back. So if you have the right strategy, that's awesome. If not, I'm going to show you where to get it here soon. But if you do, the next thing that is probably wrong is you're not doing it in the right market. Guys, there are so many videos on YouTube of people teaching different strategies, but the problem is they don't tell you, and the real thing is I don't think they know either, that the right strategy or a certain strategy only works in a certain type of market. Sure, you can have a great strategy, but if you're trading it in the worst market ever, or the market that's not aligned for that type of strategy, you're not going to make money. Like I just mentioned, selling calls is for when you think the market will go down. So if the market's going up and you sell calls, sure, it's a good strategy, but are you going to make money? No, you're not. Same thing with selling puts. You sell puts when you want the market to go up. If the market's dropping and you sell puts, do you think you'll be able to do well? No, you need to align the right strategy in the right market. So how do you know if you're in the right market? You take your good strategy and you back test it. And if you back test it over a certain amount of time, you'll be able to see when it does well and when it doesn't. Here's a terrible example of a back-tested graph. You can see here, it did poorly during this phase and then did really well here. So what am I going to do? I'm going to look at, okay, when the back test performed exceptionally well, what part of the market was this lined up with? Was this a neutral market? Was this a sideways market? Was this a bearish market? So that I know, hey, this strategy performs best in this type of market. If you have the right strategy, but you're still not having success, you're probably not doing it in the right market. And again, later in this video, I'm going to show you how to know what the right market is and what the right strategy is as well. Next, if you have the right strategy and the right markets, then you probably don't have the right mindset, okay? What is mindset? You probably have a bad time or a bad job executing the trades, meaning you let emotions get in the way, you hold trades too long, you second guess yourself, you chase trades, you get out too late, whatever it is, it's the execution of it that's failing you because your mind, emotions are getting in the way. Fear, greed, all that stuff that you know of. And so if your mindset is getting in the way, the easiest solution to this is simply to automate away the emotion or automate your trading. If you do this, this ensures perfect, flawless execution every time. And if this sounds like something you want, this is what I help people and do. I help them install the right strategy in the right market and automate it so that it's fully handled for them. So click the first link down below if you're interested in getting my help with that. Now that we know all those things, let's dive into this specific framework right here, the one that I've been using. So first thing we need to understand is what type of market are we in? So for my clients, this is what they use, and we call it the band zone, aka what is the trend? If the trend is an uptrend, that's a bullish zone. If the trend's a downtrend, it's a bearish zone. If it's sideways, it's stuck in between these support and resistance, that's a neutral zone. And then if we're overextended, aka we're too high or too low, we call those extreme bullish zones. Now, why do my coaching clients call it that? Because they get access to a proprietary indicator called the market analysis setup that tells them what the trend is. If it's in a green, it's an uptrend. If it's in a red, it's a downtrend. If it's gray, this is neutral. This is overextended. This is overextended, meaning that the market's going to bounce here. So again, this band is only available for my coaching clients, but you have to understand here, it doesn't matter if you have the band or not. Just make sure you know what is the trend, whether you're using a moving average or something like that, okay? So if we're in an uptrend, you need to understand where it came from, okay? If we've been trending up, was it coming from something like a previous downtrend and now it's reversing? Was it coming from just a consistent uptrend that's been lasting for a while? We look at the previous thing that it's done, and that tells us a lot of what's going on. Just like in history, we say that things don't always repeat, but they rhyme. That's what we're seeing here. History can repeat, history can rhyme, things like that. And so we want to look at what was the history before we jump into this specific trend. So let me walk you through each specific zone so that you know what's going on. If we're taking the market where it is right now, we can see here that the market is inside of this green zone, meaning that it's inside of the bullish zone. So when I come here and I start this decision tree, which tells me what to do, what's the band zone? What's a bullish zone? So I'm coming here now. I'm tracing this down to the bullish zone. Cool. Now I ask myself, did it come from a previous extreme zone or did it come from a previous neutral zone? So did it come from up high and now it's trending down, or did it come from below and is now pushing up? Well, it's coming from below and now pushing up. So that tells me I'm coming from a previously neutral zone. So that tells me I'm a 100% bullish trade. That means all my strategies, the right market right now is a bullish market. So now that I know the market should be bullish, now I know I need to pick a right or great bullish strategy. And for me, this breaks down into two different avenues. If you're a futures trader, it breaks down to the 111. If you're a non-futures trader, it breaks down to the short put or put credit spread. So that's how you know what the right strategy is for the right market. And obviously we like using automation to automate this at that given point. So whenever the market shifts and changes, our bots and the right strategy shifts with it so that no more emotions are stopping us from doing the right thing at the right time. So that was the current breakdown of the market. But as you can see here, if you're an extreme bullish, this is the playbook we follow. If you're in neutral zone, this is the playbook we follow. And bearish zone playbook, extreme bear. This is extreme bearish. This is the playbook we follow. If you want help installing this 4-bot system playbook into your trading, click the first link down below. I would love to hop on a call with you to walk you through how this can work for you. Okay, so obviously there's so many different scenarios, but I wanted to give you a real case scenario of what happened during the 2025 tariff crash. Okay, because I was able to make great money during this phase and a lot of people lost money. So I wanted to walk through how that happened over this period of time. Obviously, we just assessed where the market currently is, but I want to walk through how we adjust and change. Okay, cool. So the market right here is inside of a bullish market, which if we follow here, we go bullish zone, previously neutral, 100% bullish. So I do a futures account, so that means I'm doing a one-on-one trade. So right here, I know I'm doing my 1-1-1 classic trade right here, which is about a 90% win rate, back tested, actual, all that stuff like that. And then I transition into a neutral market right here. And a neutral market, again, I go neutral zone. What's the trend? If I look at the prior trend, it's coming down. So it's actually a downtrend. So the neutral zone, but in a downtrend. So that tells me I am about 25% bullish, 30% bearish, and 10% sideways. So essentially, I'm running a strangle here so that I can capitalize on both sides of the market with a bearish trade because the trend is down. And for me, that's a put debit spread. So I'm trading a put debit spread PDS trade to make money on the way down. Now, what happens when the market flips to bearish right here? It means I keep my PDS running so that my put debit spreads are running. So now I have this bearish protection here. And the strangles, I trade these super far out so that I know, hey, I have time to be right on this trade. So instead of closing these for a loss, and I saw that we instantly hit this rejection period, what I did is I traded the put debit spread down to cover the losses of the strangles, then got into bullish trades here. The bullish trades pushed me back up to help me make money. And then the strangles then recovered. So now I make money on my strangles again. I made money on the put debit spread. I made money on this bullish, and the market traded out. Now we're coming back to a normal bullish zone. So I come back to my normal 1-1 trades, and this is where the market stays 80% of the time is in this bullish market, meaning I'm using this go-to strategy. So that is how you adjust to every type of market, guys. So if you're trading one strategy and you have small win, and you have one large loss that wipes out everything, it's because you're not doing it in the right market. And if you have all those things right, the right strategy in the right market, but you're just stuck in emotions, make sure to automate it. So that's exactly what I help all my coaching clients do, is sell the right strategy in the right market and automate it to make sure you have flawless execution every single time. If you want help with that, click the link down below, and I'll see you in the next video.